Okay, let's dive in because honestly, the amount of news coming out of India's business and economic scene right now is just, well, staggering.
It really is. You've got these huge growth numbers hitting headlines, massive investment pledges being announced.
Stock market swings making people nervous, but then also some really blunt talk about the challenges underneath it all. It's complex.
Absolutely. It feels like we're at this point where the big, shiny numbers are being put right next to some, very real ground level stuff
Yeah.
that maybe doesn't quite fit the narrative.
Exactly. And just trying to make sense of that flood of information.
Yeah.
You got market reports, company updates, job stats, even personal finance tips flying around can feel a bit much.
Hmm.
So our mission here with this deep dive is to take this stack of sources you've shared and really try to cut through the noise.
Find the important bits, connect the dots.
Yeah, find the essential nuggets, see how things link up across these different areas, and hopefully give you, the listener, a clearer, maybe more nuanced picture of what's actually going on. So, okay, let's unpack this.
Let's do it.
Right. Let's start with the immediate pulse of the stock market. Your sources flag some pretty noticeable swings recently. We saw the Sensex drop, what was it, around 900 points?
Yeah, and the Nifty 50 dipped below 24,750. That was specifically on May 27th.
Okay. And what was driving that?
Well, the usual suspects were mentioned, things like weaker global cues, negative vibes from international markets. Plus, there was significant drag from some heavyweight sectors, IT and financials especially. They often lead the way, right?
Right. They carry a lot of weight in the main indices. But what's interesting, and you pointed this out, is that the pain wasn't spread evenly across the whole market, was it?
Oh, exactly. That's a key point. While the big indices, the Sensex and Nifty, took a harder hit, the broader market showed a bit more resilience. Well, the Nifty Mid-Cap 100 only saw a slight slip, and maybe surprisingly, the Nifty Small Cap 100 actually managed a modest gain on that day.
So what does that divergence tell us?
It suggests that while maybe the big picture sentiment, the large cap mood, was hit by those global factors or sector issues, the appetite for smaller and mid-sized companies wasn't quite the same. Different things were happening under the surface.
Interesting. And if we drill down even further to specific stocks, there were some notable movers. Farad Electronics was up.
Yeah, gained over 0.7%, and the sources mention high trading volume. Aditya Birla Fashion also surged over 2.25%. Again, with high volume.
And when you see high volume on stocks that are gaining, what does that usually signal? Strong interest?
Generally, yes. It suggests strong buying interest, conviction from traders. For Bharat Electronics, the reports linked it to their consistent financial growth. For Aditya Birla Fashion, it points to significant market activity, maybe tied to company news or just positive sector feelings.
Okay. And on the flip side, some pretty big names were down. Ultratech Cement, Ixieltech, TCS, Grasim, Power Grid, Infosys, HUL, ITC. I mean, that's quite a list of blue chips.
It is. A lot of household names there.
Any common reasons cited for those declines?
For a number of them, yeah. Factors like weak quarterly results were mentioned. It just shows how individual company performance, especially for these index heavyweights, can really pull the headline numbers down, even if other parts of the market are doing okay.
Right. Makes sense. Now, shifting slightly IPOs, we had a Bryna Weaves list. It listed at a premium, which sounds good, but the sources noted it was actually less than the gray market was suggesting.
Yes, the gray market.
Can you quickly explain what that is?
Yeah.
And why that difference matters?
Sure. So the gray market, it's basically an unofficial, sort of informal market where shares of an upcoming IPO get traded before they actually list on the stock exchange. And the price there is often watched as a kind of early indicator of investor demand. So when Bryna Weaves listed at a premium 12.5%, I think, but that was below its gray market premium, which was closer to 20%.
Right.
It suggests that while demand was definitely still good, maybe some of that initial buzz or expectation had cooled off a little by the time the official listing happened. It's just a nuance to watch.
Got it. And another IPO point, Neilsoft refiled its papers. And they reduced the fresh issue size. What's the significance there?
Refiling itself isn't unusual. Companies adjust plans. Reducing the fresh issue size means the company is planning to raise less new capital from the public for its own use, like expansion or paying down debt.
Okay, so where does the money go instead?
In this case, the offer is now a mix. Part fresh issue, part offer for sale by existing shareholders. That means some of the IPO proceeds will go directly to those original owners who are selling their existing shares, rather than all of it going into the company's coffers. It's just a different structure for the deal.
All right, makes sense. So let's zoom out from the daily market moves now. There was this huge economic headline. India officially becoming the world's fourth largest economy.
Yes, that was based on the IMF's nominal GDP forecast. India, at around $4.187 trillion, projected to overtake Japan.
And the NTI Aayog CEO was quite bullish, wasn't he? Projecting third spot soon.
Within 3 years was the projection. It's undoubtedly a significant milestone in terms of just the sheer size of the economy.
And this is where it got really interesting in your sources. Right alongside that big, impressive number, there's a very strong counter-narrative presented, a reality check almost.
Absolutely. This was a major theme. While hitting fourth largest is a big deal in aggregate terms, many analysts were very quick to jump in and say, hold on, this doesn't automatically mean widespread prosperity or, high living standards for the average Indian.
They really hammered the point. GDP isn't the same as development.
Exactly. GDP growth and development. They were very clear on that distinction. High GDP doesn't inherently mean high quality of life across the board.
And they didn't just state it as an opinion. They brought data, some really quite startling comparisons.
They did. India's per capita GDP, that's the total GDP divided by the population, giving a rough idea of average income per person, is forecast around $2,400 for 2025.
Okay.
And the sources highlighted that this number is actually lower than countries like Kenya, Morocco, Cote d'Ivoire, and obviously way below developed nations.
Wow. Lower than Kenya, Morocco on a per-person basis.
Yeah. And one analyst even crunched the numbers and suggested that based on the current gap in per capita income, it could potentially take India something like 50 years to reach Japan's current quality of life.
50 years. Okay, that really puts that fourth largest economy headline into a different light, doesn't it?
It absolutely does. And there's another related point about sort of global comparisons.
What was that?
The argument that, look, before we start comparing ourselves to Japan or the U.S., maybe India needs to, quote, win the Brazil-Argentina round first,
Whoa.
Meaning focus on significantly lifting that per capita income level, ensuring the growth is more evenly spread, getting the basics right for more people before aiming for the top tier.
And maybe the most jarring comparison that was mentioned related to basic needs, like hunger.
Yes, that was stark. An analyst flagged the disparity. Despite the high overall GDP rank, India ranks behind countries like Nigeria, Kenya, Ghana on global hunger indices.
Yeah.
It powerfully illustrates that gap between the macro number, the total size of the economy, and fundamental human development indicators on the ground. It's a crucial, sobering point when you're trying to assess the real state of things.
Definitely sobering.
Yeah.
Okay, but on a more positive macro note, there was mention of the RBI's huge surplus payout to the government. RS 2.68 lakh crore.
Yes, that's a massive amount. It's basically the Reserve Bank transferring its profits, its surplus income to the government. And this year's transfer was exceptionally large.
How does that help the government?
Well, it's a significant windfall. It gives the government a lot more fiscal breathing room, helps manage the budget deficit, maybe fund some key projects, or reduce the need for borrowing. It's a definite plus for public finances.
And the government's overall view on growth remains positive.
Yes, the official stance, backed up by forecasts from places like SBI and the NSO mentioned in the sources, is still optimistic. They're expecting GDP growth for this fiscal year, FY25, to land somewhere in the range of, say, 6.3% to 7.2%.
Okay. Let's shift gears a bit now. Look outwards to the international stage. Your sources touched on trade, particularly the relationship with the U.S. And the potential shadow of protectionism.
Right. The possibility of increased U.S. protectionism, maybe higher tariffs, is definitely something being watched closely.
Any specifics mentioned?
Well, one source used the example, hypothetical one, mind you, of a potential 26% tariff rate threat against the EU, just to illustrate the kind of protectionist thinking that could emerge under certain political scenarios.
And how is India trying to position itself in its own trade talks with the U.S., given that backdrop?
India's actively trying to use the ongoing negotiations for a bilateral trade deal to secure a full exemption from any such broad-based tariffs that might come up. They want to shield their exports.
Makes sense. Are there any timelines associated with these talks?
The sources mentioned some goals, maybe achieving some early stage wins by July this year, and then aspirations to get the first phase of a more comprehensive agreement done by fall 2025.
Okay, so it's an ongoing process.
Very much so. And the broader context, as one source pointed out, is how these differing views on things like trade deficits, which a protectionist approach tends to emphasize, can complicate even relationships between allies, potentially hindering cooperation on other issues like coordinating responses to China's economic strategies.
Right, trade doesn't happen in a vacuum.
Yeah.
Okay, let's turn to corporate India now. We saw some absolutely huge investment announcements, especially focused on the Northeast region.
Colossal figures, really. Vedanta committing Rs 80,000 crore, the Adani Group pledging Rs 50,000 crore, and Mukesh Ambani's group announcing Rs 75,000 crore.
Just massive numbers. What kind of sectors are they targeting there?
It's quite diverse, actually. Across those commitments, you see mentions of energy, infrastructure, minerals, digital connectivity, logistics, even skills training. And interestingly, some social initiatives, too, like cancer care facilities and centers for training Olympic athletes. It really signals a major strategic push into that region.
Wow. Okay. Beyond those headline pledges, what about specific company moves or strategies that caught your eye in the sources?
Well, there was the news about Tata Digital shifting its HQ, moving from Mumbai to Lower Peril, or potentially Bengaluru.
What does a move like that typically imply?
Consolidation.
Could be consolidation, yeah. Or shifting the center of gravity, maybe aligning key functions closer to leadership or tech hubs. For employees based in Mumbai, especially in tech roles, it likely means a significant change, possibly needing to relocate to stay close to the core teams.
Right. What else? Fortis Healthcare seems to be focusing its expansion plans on its core markets, and they're seeing a recovery in their diagnostics arm. So that sounds like a focused growth strategy after dealing with past issues. Radico Khaitan is making a play for the high-end market, launching new luxury whiskeys.
Trying to capture that premium segment.
Exactly. And then there's Prosus, the big global tech investor. Despite taking hits on some high-profile Indian investments like Byju's, PharmEasy, Zest Money, they seem remarkably undeterred.
Still bullish on India.
Very much so, it seems. Their CEO was quoted reiterating optimism about India's long-term growth potential during a recent visit. It's an interesting contrast between past challenges and future confidence.
Definitely. Now, corporate India wasn't all smooth sailing in the reports. There was also its share of, let's say, turbulence and controversy.
For sure. The Byju saga continues to unfold. Byju Ravindran himself reflected on the company's downfall, specifically calling that $1.2 billion term loan B a critical error.
And he made allegations against the lenders.
Yes, accusing the U.S.-based lenders of trying to undermine the company's reputation. It's become quite contentious.
And we also saw a CEO from the quick commerce space making public accusations.
Yeah, the Zepto CEO went public, alleging that a CFO at a rival company was deliberately circulating false data about Zepto to investors and others. That kind of public spat is pretty unusual and just highlights how intense the competition is in that sector.
Wow. Okay. And there were also some issues bubbling up around airports, specifically ground handling services.
Right. Salibi, a Turkish ground handling company, decided to exit its Indian operations. That impacts services at Mumbai and Ahmedabad airports.
And linked to aviation, there was that earlier story about Air India and Indigo.
Yes, there were reports which Air India denied, mind you, suggesting they had lobbied the government regarding Indigo's aircraft lease agreements with Turkish Airlines. It just adds another layer to the competitive dynamics in the airline industry.
Which is already dealing with operational hiccups, like that Indigo flight hitting a hailstorm near Srinagar recently.
Exactly, all part of the complex aviation picture.
Now, one intriguing broader trend mentioned was about family businesses, something about heirs.
Ah, yes, the HSBC report. It found that only about 7% of Indian heirs feel obligated to join the family business.
Only 7%, that seems low.
It is quite telling, isn't it? It really points to a potential cultural shift. The next generation might be prioritizing their own interests, maybe seeking external opportunities, rather than automatically following the traditional path of succession. A significant change in mindset.
Interesting. And just to round off the corporate section on a different note, philanthropy, Mukesh and Nita Ambani were recognized.
Yes, they were included in the Time 100 philanthropy list, acknowledging their substantial donations made during 2024.
Okay. Let's pivot now to the job market, because the picture your sources paint here is, well, quite stark in places.
It really is. There's a significant disconnect highlighted in one report. It claims something like 83% of engineering graduates and 46% of B school graduates are ending up without a job or even an internship offer.
83% of engineers. That's huge, especially when you hear recruiters saying they're focusing more on talent and skills now, not just the college name.
Precisely, it's a paradox. And then you see the sheer volume of people applying for relatively lower paying jobs.
Yeah, those numbers were eye-watering.
Weren't they? Over 15,000 applicants, including many postgraduates, for just 1,800 handyman or utility agent roles at Mumbai Airport, paying around Rs 22,500 a month.
Wow.
And maybe even more striking, over 46,000 postgraduates and 6,000 graduates applying for contractual government sweeper positions in Haryana.
Sweeper positions with post-grad degrees.
It just underscores the intense pressure and, frankly, desperation for stable employment, regardless of educational qualifications for many. It's a real demand-supply mismatch.
Amidst that pretty tough reality, though, there was news of both job cuts and some hiring increases.
Yes, a bit of a mixed bag. Layoffs were mentioned at places like Ola Electric and Yes Bank, often linked to restructuring efforts.
But hiring is picking up in some areas.
Seems so. Particularly in sectors like e-commerce, logistics, and manufacturing, often driven by anticipation of the upcoming festive season. This tends to create a lot of seasonal work. Meesho alone was cited as enabling 8.5 lakh such temporary roles.
Okay, so seasonal boosts are happening. Anything else on the hiring front?
Infosys has its Power program, which offers significantly higher starting salaries, around Rs 9 lakh for certain freshers, much higher than their standard packages. So that indicates very targeted hiring for specific, perhaps high-demand skill sets.
Got it. Now, inevitably, when we talk jobs these days, we have to talk about AI. What were the warnings or projections from your sources?
Well, there was a pretty stark warning that white-collar jobs will go first and fast because AI is getting so good at automating knowledge-based tasks.
That's a sobering thought for many.
It is. But the World Economic Forum projections cited also offered a bit more nuance. They foresee significant job creation by 2030 alongside the displacement.
So creation and destruction happening at the same time.
Exactly, which really emphasizes the growing importance of uniquely human skills, things like creativity, critical thinking, emotional intelligence, resilience, stuff AI can't easily replicate.
Yeah.
Plus, obviously, the need to adapt and learn new technical skills.
Makes sense. And there's still that ongoing discussion or debate about the official unemployment numbers themselves, right?
Yes, definitely. You often see a difference between the official government figures, which tend to be lower, and data from independent surveys or reports.
Is anything being done to get more clarity?
Well, the sources mention that the Ministry of Statistics, MOSPI, is looking into potentially releasing employment data more frequently, maybe even monthly instead of quarterly. That could certainly help provide a more up-to-date picture.
That would be useful. And one last specific interesting jobs initiative mentioned was from Brahmos Aerospace regarding Agnavirs.
Yes, that was interesting. They're apparently offering job reservations specifically for Agnavir's personnel recruited under the Agnipath scheme. It's a recognition of the value of their military training and discipline for roles within the aerospace company.
A way to leverage that specific training. Okay, let's wrap up by touching on a few key industry specifics and weaving in some relevant personal finance nuggets that came up in the sources.
Sounds good. Starting with industries, the government seems keen on boosting telecom R&D funding quite significantly.
How much?
The aim mentioned is to get it up to Rs 1,000 crore annually. That's a big jump from previous levels. The focus is on pushing development in next-gen tech, like advanced 5G, 6G, and even quantum communications, aligning with national policy goals.
Okay. Big push in telecom tech. What about the auto sector? Lots happening there, too.
Always. Hyundai announced really ambitious plans, 26 new models by FY30 with a clear focus on electric vehicles and hybrids.
26 models, wow. And Royal Enfield going electric.
They're targeting their first electric bike launch for 2026, so that's on the horizon.
And Hero Motocorp. Interesting dynamic there.
Yeah, the sources noted that even though their overall market share might have dipped slightly, their actual revenue is getting a boost from two key trends. Premiumization, people buying more expensive models, and the general shift towards EVs.
So selling fewer bikes, perhaps, but higher value ones.
And essentially, yes, it's lifting their top line.
And what about real estate? Anything stand out?
Mumbai was flagged, unsurprisingly perhaps, as the most expensive office market in India. Hyderabad came in second.
Okay.
And another point was the growing role of NRI investors in the Indian property market. Their share in real estate investments has apparently increased quite a bit over the past decade.
Interesting. Okay, so how does some of this news connect back to personal finance for someone listening?
Well, some connections are quite direct. The ratification of the EPF interest rate at 8.25% for FY25 directly impacts the retirement savings of millions of employees. That's a key number for financial planning.
Right. What about investment ideas?
The sources touched on a few different perspectives. Mohnish Pabrai's philosophy of low-risk value investing was mentioned. There were arguments presented for why you might consider including some U.S. stocks, like Apple or Amazon, in your portfolio for diversification.
Global diversification.
Exactly. And there was a discussion comparing gold versus Bitcoin, basically concluding that there's no single better choice. It really depends entirely on your own investment goals, your time horizon, and how much risk you're comfortable taking.
Sensible advice. Any specific benefits or strategies mentioned?
Yes, the Ayushman Vandana card got a mention. That's the one providing Rs 5 lakh health coverage for citizens over 70. A specific benefit to be aware of.
Good to know.
And more generally, there were references to practical personal finance strategies, like tips for paying off personal loans faster, or advice on how to rebuild your emergency fund if it's depleted, maybe even while continuing your regular investments like SIPs. Basic but important stuff.
Okay, so quite a range there, too. Right, let's try to pull this all together then. We've gone from the day-to-day market jitters and specific stock stories
to that big picture debate about India being the fourth largest economy versus the per capita reality and development challenges.
Looked at the complexities of international trade talks, the massive corporate investment pledges, but also the controversies and strategy shifts.
Dived into the tough realities of the job market, the graduate unemployment paradox, alongside areas of hiring and the looming impact of AI.
And finally touched on specific industry moves in telecom, auto, real estate, and linked it back to personal finance points like EPF rates and investment thinking.
And bringing all these threads together, it's just so clear how interconnected everything is, isn't it?
Absolutely. Market sentiment reacts to economic news and global events. Corporate decisions are shaped by investment climates and labor issues. Individual finances are buffeted by interest rates, job prospects, market returns. It's all linked.
It really paints a picture that's anything but simple. You absolutely see the ambition, the scale, the real progress in those headline growth figures and those huge investment commitments.
You do. But then, right alongside that, your sources lay out these persistent, deep-rooted structural challenges. You see it in the per capita income comparisons, the social indicators like the hunger index ranking, and that intense scramble for even basic jobs amongst highly educated people.
Which brings us, I think, to the core takeaway, the central question emerging from this whole set of information.
Yeah. So thinking about this really complex, sometimes quite contradictory picture, you've got the high-level economic heft and massive investments on one side, but these significant hurdles in widespread development, quality of life, and graduate employment on the other. What does this whole mix truly tell you, the listener, about India's current path?
And maybe more importantly, how might understanding this more nuanced, perhaps less straightforward reality actually inform your own thinking? Whether that's about your career, your investments, or just how you make sense of the economic landscape unfolding around you.
Something to definitely ponder on.